What's going, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital FX YouTube channel. Welcome back, and if you're new to this channel, we talk about everything to do with trading and we focus more on our Deriv indices. And today we want to understand how to catch reversals on the Deriv index using the weekly cycle. So what we are going to do here is we're going to be using levels to understand how price moves and how to get in and where to get out. So from the picture that you are seeing on your screen right now, you can clearly see that this is a cycle that's in play, right? So number one, what do we have? We have level one. So we call this move, the explosive move number one, we call it level, and this is another level. And this is another what? Another level. This is a special type of market structure that you can use to predict where the market is going to catch reversals. So what you are going to see here is very simple. We have a level one, then retracement level two, retracement level three, retracement. Purposes of simplifying this, you are going to partition these levels into what? Into days. So let's say this is day one, right? Then this is day two, then this is day what? This is day three. So this is equivalent to this being a Monday, and then this being a Tuesday, and this being a Wednesday, and this being a what? A Thursday, right? So where we get what? The reversal that we are seeing here. So what you want to see is three levels, then you see what we call a peak. So it's a minimum of what? Of three levels. What will tell you that a reversal is coming is a what? Is a peak formation. So from what you are seeing here, this is a what? An M formation, and this M formation is doing what? After formation of this M wave, what do you call this neckline that price what took out? So this neckline break is same as what? Breaking market structure or change of what? Of change of character, right? So this is what you are seeing. After break, you start looking for what? For trade entries, because it would have been what? Confirmed that prices indeed changed direction. So let's explain that again, so that you guys can clearly get what we're trying to say. So number one, what you are saying is the cycle is levels, right? And after three levels, you start looking for what? For a reversal. So we have one level, two level, three level, right? So after three levels, you start looking for what we call a peak formation. So after three more levels, you start looking for a peak formation. When the peak formation is locked in, you look for what? For a break of the neckline of that peak formation. So the peak formation can be an M, can be a W, can be a triple top, or can be a triple what? Triple bottom, or a head and shoulders, depending on the pair that you are trading, right? So these levels, for simplicity's sake, can be counted using all days, right? So it means you can count days as your what? As your levels. So this is Monday, day one. This is Tuesday, day two. This is Thursday, Wednesday, day three, and Thursday with a peak formation. So this is a day one rise, day two rise, day three rise, peak formation, break, and to start looking forward for our trades using the methods that you already know. So we are going to be using order blocks to get into the trade, and we are going to be using flip zones, and we are going to be using the patterns that we already know. But I want you to get something before we go to look at the real charts. So what do you have after a peak formation? You also count 3 days, right? So this is a Friday, this is a Saturday, this is a Sunday. Remember, we are trading the Deriv indices, and you can trade 24/7, which means you can trade during the weekends. And if you don't have an account to take advantage of this, you can find the links in the description down below and in the comment section down below, and get your account so that you can trade every day and make money other traders are doing, right? So this is level one, right? So we are assuming that in level one, you're not yet involved in the trade. Why? Because you're waiting for a confirmation of this peak formation or a confirmation of this trend going down, right? So after break here, maybe you get into the trade at this second level. Then second level, maybe you keep holding third level. And when this peak formation forms, you exit all your trades and wait for this break. And I want you to understand that every time you see a peak formation, even after two levels, this is called a reset. So a reset comes after three levels. Then we have a peak formation. We think it is what? It is change directions. Then it does two levels, then resets again and continues. So after a reset, so a reset is more like a new peak formation, right? A new W or a new M that is being formed in the market, and you start counting again as you go. So with that being said, let's go to the charts and clearly see or clearly understand what we are seeing and what we are doing. Right, so from what you are seeing or from what you are seeing here, you can clearly see that we are having 3 levels on this particular one. So what are we doing? We are counting our levels. Remember, we can count days. So this is day 1, right? Then after that, what are we doing? We have day 2 rise. Then after that, what do you do? We have day 3. So after day 3, you have a peak formation here where we are having this M formation being formed. And what do you do after this? You have a break off out of the neckline or a break off structure that you are seeing here. So what are you doing after a break of structure? You are marking your usual order blocks and fair value gaps. As you can see, we have a fair value gap in here, and price broke here or took out this structure, came back and retested the fair value gap. So what are we going to do to take advantage of this trade? You're going to go to the M15 or to the lower time frames. So on the M15, do you see what is happening here? We have day 1 rise. As you can see, we have a rise. Then we have day 2 rise. We have day 3 rise. Then on day 4, we have a peak formation. You see this M formation, gorgeous M formation that you see here. And what do you see? You also see that we have what? This order block that you have, and the fair value gap that you have marked from the H1 is this second yellow zone. Look what price did in this scenario. Price just came, retested, and went away. So if you look closely again, I want you to see that we also have what? Level 1, right? And level 2, right? And level 3. After that, what do we have? We have a break of what? A break of the neckline, which is a break of structure here on what? On the H1, right? Or the initiation of what? Of second level. And look at what this did. So this is your order block. You go to the M15. What do you see? You're looking for your what? For your trades using what you already have. So this is what? This is the retest of what? Of this order block from the H1. And what do you see? You are looking for your trades in this what? In this area. So we'll go back here. What do you see? So how do you get trades and continue with the trend? This is a question that you might be having right now. So when we are going to answer that using this. So when you are looking at levels, I want you to pay attention to what? To flip zones, because most of the times when you're trading levels, I want you to pay attention to these flip zones. You see, when price breaks a high, you have to pay attention to what? To those areas, right? Those are the areas that are going to give you the reversals that you want, right? So this is a break, and look at what price did, and this is another low. Let's look at this low, right? So this low here, if you go to the lower time frame with this low, so this being a flip zone and being in the fair value gap, you clearly see that if you go to the lower time frame, it will look like this, and if you go down again to the 5, it will look like this. And how do you end in this trade? You wait for break on the lower time frame, and you wait for retest of of this fair value gap that you see, and look at this trade that you could have been involved in using this simple method, right? Break, right? You look for another low and you mark that low, and you look for another low and you mark that low. You see, after level 1, as you can see, after day 1 drop, day 2, you are more likely to go and retest this flip zone, as you can see in this picture right here, where price just retested there. And if you go to the lower time frames, you're just going to see how that materialized on the M5. So this is the M5, and let's see how we could have been involved in that trade. And as you can see, we have we have a break of structure as price tests that yellow zone, break of structure and retest, which is another M formation, as you can see here. So you could have taken advantage of this M formation by using the simple method of flip zones, as you can see. So what's next? We go and mark out the next low, as you can see. So this being the next low, what are we waiting for the next day? We're just waiting for price to retest this particular zone, and we go down to the lower time frame and try to get our trade from that. So this is the lower time frame, and this is the zone from the H1. And what do you see? You see price going in and retesting that zone, as you can see from this. So this is a pin on H1, and what are you waiting for here? You're just waiting for a break of a what, of a low. So this was a break of a low and retest of what, of some order blocks in that area. So this was the retest. So your trade was going to be in this what, in this area. Would have caught a reversal right there. You've got a reversal right there. So what are you going to do next? You are going to be looking for more of these flip zones, right? So we've taken out this low and this is the retest. You take out your zone again, you mark this break of a low and this is a retest, price goes down. You go to the lower time frame. What are you going to look for? You are looking for your M's and you are looking for your W's around the yellow zone or around the zone that you're trading. So this is the zone that you have marked, break of structure, and price comes in and gets you a trade. So if you look closely, you clearly see that we have an order block on the M5 here, and after break of structure, as you can see here, we can clearly see that this was a worthy trade that you could have taken at this particular zone and what, and profited as price was going what, or his price was going down. We go on again. When price changes direction, we are just going to do the same thing. So this is the same zone that price broke here and came back and retested. So what are we waiting for as price is trading in this particular zone? Remember, we said we will count days of rise. So this is day number 1, right, of rise. And where do we have that break? Or we take this and that break is in this area, right? So what are we waiting for? We're waiting for a W formation around this area so that we can form another day of rise or level 2 here and continue like that. So if you want to catch your reversals, these are the areas to be catching your reversals. Number 1, you mark this area and try to catch your reversal on the M5 or M15. You make another area, you try to catch this reversal on the M5 or the M15. On the H1, it will not be a reversal. On the H1, it will be a continuation. But on the M15 and the M5, it will be a worthy reversal, worthy of a screenshot to post on Instagram. I'll see you guys in the next one. I hope this was helpful. Cheers. Hands to the head. Trade what you see. Shocks out.